Schools First FCU in the house, ready to go.
Jonathan here. He's going to tell us about his most recent film.
Yep. He's got a new one that's coming out.
It
It's
takes place in a bank.
It does. It's called Rising Interest Rates.
Oh, yeah, that'd be a good one.
That is what we're talking about today. That's right. Jonathan, thanks for coming back. Why? Why are interest rates continuing? I thought we were going down.
So interest rates are all determined by the Federal Reserve.
Okay.
Right? And so the Federal Reserve will adjust the federal funds rate to help combat inflation. I don't think things did exactly as we were projecting, so the interest rates have kind of stayed high. When rates go up, it makes borrowing very expensive. But on the flip side, the good news is if you're a saver, it's a great opportunity to earn more money on the money that you're keeping in the account.
We're growing a little bit too.
These changes are going to affect everything from your credit card debt to home mortgages and even your investments. So if you think of interest rates as the economy's thermostat, right? When the economy gets too hot with inflation, the feds will raise the rate to help cool things back down. It's not great in the short term, but the idea is that it'll help stable things out in the long term.
That's a good. I like that analogy.
Got to do it. All right, you touched on it there for a second. So it does. It affects our mortgages. It affects our credit cards. It affects all those things, mainly for the borrowing. We're hoping it kind of comes down. You said it came down a little bit, went back up, and kind of that's where it's been now.
Yeah, it's all determined by the Federal Reserve. So everybody's waiting to see what their next meeting is going to do, and then that'll kind of determine what the next steps on those rates will look like. If you're a borrower, it's just more expensive in a high rate environment. So things to be mindful of is if you have an adjustable rate loan, like a credit card or an adjustable rate mortgage, when rates go up, an increase, that means that your monthly payment to them is going to start increasing from what you were previously paying. That can be challenging. And if you're looking to buy a new loan, that new loan money is going to be at a higher interest rate. So that loan now costs you more money over the life of the loan. So in a real world example, if you have an adjustable rate mortgage, let's say it's $500,000 on a 30-year loan term, an increase of just 1% is going to change your monthly payment by $300.
Holy cow.
Which is significant.
Oh, that's a lot.
So with that in mind, I want to go back real quick to the good news. Those borrowers, tell us again, the savers, how are they benefiting?
So savers in a high rate interest rate environment means that your savings account, your money market accounts, your share certificate accounts are all paying you more money. So if you're a saver, you have the opportunity to really take advantage of these higher rates and maximize your savings. Specifically, like if you're a retiree and you're living on a fixed income, this is a great opportunity for you to start increasing your monthly income with good investments. Well, one of those would be a strategy called certificate laddering. Right? And so what you're doing is you're taking the money that's sitting in a regular savings account and you're moving it into multiple certificates that are maturing at different times but earning you a high yield. So now your money's locked up, but you always have something available coming due the following month. So you're not really without access to your funds and you're getting the most amount each month out of that.
Okay, I need to do that. So how do I talk to you with that? What do I do? I'm not a member, though.
This would be a great time to talk to your credit union about the higher yields that they're having because of the higher interest rates. Yes.
I thought we've gone over that. Don't you have a teacher somewhere in your family? I thought there was someone that was, no? Teacher adjacent?
Down the road?
I'm married to a teacher, so I feel
like... There you go. We can do that.
Schools First, it has to be for a school employee or a direct family member.
All right. Well,
get a teaching job.
Yeah, so I get a job.
Coach at a school.
Part-time?
Maybe.
Credit unions in general are still good, though. So there's plenty. I would love everybody to come to Schools First. But yeah, any credit union is going to have to be a good opportunity with high yield rates.
Because this would be good.
This is also why he's a good actor.
Yeah.
Right. That's why he's making motion picture films.
That's why he's making that movie, Rising Interest Rates. Exactly.
Jonathan, great job. There's all the information about Schools First, rising interest rates. But look, if you want some information, head, as he said, to any credit union. But we'd love you to choose Schools First FCU.
Yeah, I got like 1.8 million sitting. I got to spread that out somewhere.
Spread it out.
All right, cool.